So, very good morning. Today, in this session, we are going to complete some more parts inside the chapter share valuation. In this particular chapter, we are doing all kind of quality questions. Last class, we have already completed uh, question number 11, question number 12, and we also tried understanding the concept of H model. So, big concept. So, we spent some time. But before that, I gave one question as a homework for you, which is question number 13. This is a November 2017 question which came for 6 marks, and it was a original question framed in 1999 November exam. Okay, 2017 again this question came. So, before going into the question, let us first read it, understand the idea behind it, then we will be proceeding into doing the answer. Rahim Enterprises is a manufacturer and exporter of woolen garments to the European countries. Their business is expanding day by day, and in previous financial year, the company has registered 25% growth in export business. So, the company is in the progress of considering a new investment project. It is an all equity financed company, means debt concept will not be there. With 10 lakh equity shares with a face value of rupees 50 per share. Current issue price of share is current issue price. And if company has to go for a public offer now, the current issue price of the share is 125 rupees ex dividend price. Okay. Annual earnings EPS are 25 per share. Annual earnings are how much? 25 per share. And in the absence of new investment, if the investment is not there, it will remain constant in perpetuity, means 25 will continue till perpetuity. All earnings are distributed at present. Because of this, EPS will become DPS. Next, new investment is available which will cost 1 crore 75 lakhs in 1 year's time, and will produce annual cash inflows thereafter of 50 lakh. Thereafter means what? Till perpetuity it will generate a 50 lakh of cash flow. Analyze the effect of new project on dividend payments and also on the share price. This is a question that was tested for 6 marks or 7 marks. So it came in November 2017 examination. Okay. Or 8 marks. So I didn't remember the marks exactly, but November 17 question this is. Read the question for a while before we go with discussion and solution as well. Sir, if you observe clearly, question number 13, question number 12, question number 11, question number 10, question number 9, all these are common one concept. Project analysis in relation to share valuation. Okay. So every question is linked to one common agenda. What is a project analysis? Capital budgeting question, which is linked to share valuation. Read the question. I will give you 2 minutes time maximum now, because already I have given one full day chance also for you to do. But maybe some people might have missed the yesterday's class. That's why for them, a benefit of doubt, I am giving 2 minutes time to read the question. Okay. Now please tell me, sir, I have given enough time. Please don't ask for extra time now to read again. Can I continue? Can I continue? Okay. Yeah. First thing, in this question, if you observe, again same problem, they did give KE for us. Okay. Right now. Step 1. Calculation of KE. Calculation of KE. Right now. All earnings are distributed. Hence, EPS is equal to DPS. First mark. Okay. EPS is equal to DPS. Next, see the situation here once. Current situation. Current issue price is 125. Okay. Annual earnings are 25 per share. Annual earnings are 25 per share. And in the absence of a new investment, it will remain constant in perpetuity. Before project, before project, the EPS is constant till perpetuity. Why I am writing this point? Hence, no growth. Hence, no growth. KE without growth. KE equal to D by P. Rupees 25 divided by, they have given already rupees 125. Take calculator here. 25 divided by 125. 20% is our KE. 20% is our KE. First of all, everyone, have you done up to here or not? Have you written up to here or not? Everyone clear? Okay. Here one thing you need to observe in the question. Okay. See, there is a 25% growth in the export business. Okay. Sir, 25% growth is there, na sir? Then G should be 25%, na sir? Why you are not considering? This is a valid question that everyone has to ask. Okay. See, relevant or irrelevant, how to understand the 25, I am going to tell you now. My question is, 25% growth is given in the question or not? Everybody answer, yeah, don't sit idle. 25% growth rate is given in the question or not? They are only saying that company has registered a 25% growth in the export business. Sir, when growth is given in the export business, why you are not considering it? This is question. Correct? Listen. How to understand that also I will tell you. There are two things which we should know that is not G. Okay. Reason number one. We are using perpetual dividend model. Correct? Perpetual dividend model. అంటే when I say P naught equal to d1 by k minus g, the first and foremost assumption of Gordon's dividend growth model is growth can never be more than ke. In this case, ke if it is 20, growth will be 25. Okay, this is number one. Number two, second important reason why we cannot take that as a G. See, they said export business is growing by 25%. Business means what? The income sales are growing. Equally, purchases also will grow or not. Therefore, they net off each other. Earnings, there is no change. It is not growth in earnings. It is growth in business. Business is overall sales of the company. If sales increases, the variable cost also increases at the same rate. What we learned in marginal costing? Whenever sales, which is a variable item, grows, variable cost also will grow at the same rate. Purchases is a variable cost here. Answer, everyone. I'm talking to you, everyone. Understood? Okay, that's the reason why they are not considering. And moreover, third reason also is there in this question. Do you know what is the third reason? They only said that, and in the absence of new investment, it will remain constant. They are only saying clearly, no growth, it stays constant. Okay, so this is the point here. So now what you have to understand, whenever the company is proposing to go for a new investment, the only way is it won't go for debt. It won't go for new equity issue. It will be taking the money from the existing earnings, sacrifice the dividends, compromise the dividends, invest in the project. This is similar to that of all the previous questions we have done already. But listen carefully. Step 1 complete and come to step 2. I'm making it full screen. Right now. Step 2. Step 2. Okay, step 2. See the question once. See the question once. Company is a all equity financed company. 10 lakh equity shares are there. Current price is 125. Current earnings are 25. Take calculator. 25 into 10 lakh shares. And what is the current earnings? 2 crore 50 lakh. How many? 2 crore 50 lakh. Okay. What is 2 crore 50 lakh? It is a current earning. Okay, well, every year same 2,50,000 will come or not. But what is happening next year? Next year, new investment I am taking up, which require 1 crore 75 lakh. From where you will get that 1 crore 75? Next year also earnings will be 2 crore 50 lakh or not? From that 1 lakh, 1 crore 75 lakh we will deduct minus 1 crore 75 lakh. Then next year my dividend will not be 75, my dividend will not be 25 rupees, it will be only 7.5 rupee. 7.5 rupee. In the following year, the dividend will increase because of the new project. New project is giving me 50 lakh rupees every year or not? So 50 lakh every year means 50. Okay, 50 plus 250. 2 crore 50 lakh already there. 50 crore 50 lakh is now added. So totally it has become 3 crore rupees divided by 10 lakh shares. 30 rupees is our new earnings. 30 rupees is our new earnings. So that's how we need to calculate our new share price. Did you all understand the meaning clearly, everyone? Shall I repeat? Shall I repeat or shall I continue? Okay, one last time I will tell you the point. If anyone missed, please listen carefully. Important question here. There is chance to get repeated also, because long back 10 years back question, chances are there to come back. See what happened in this question. This company wanted to take up a new project. Normally what is the value of this company? 125 rupees. Okay, how much? 125 rupees. Now what they are trying to do here, cash flow PV at the rate of 20%, PVCF. Like this we need to do now. Listen first, roughly I will do. Normally now 20 rupees is the 20 or 25. 25 rupees is the earnings which will be paid as a dividend. Year 1 la what is happening? Year 1 la 2 crore 50 lakhs is there. Here I am writing 2 crore 50 lakhs I will get, but 1 crore 75 lakh investment I am going to put. Because of this only 75 lakhs will be there, divided by 10 lakh shares. 7.5 will be my dividend. How much? 7.5 will be my dividend. What is 7.5? 7.5 I will be receiving next year. Instead of 25, I will receive only 7.5. Okay, va? Now listen carefully. This is important point. Next year, until second year onwards, like that I can tell. Second year, how much you will be getting? For the second year, I will get to 25 commonly. Anyway, normal earnings will come, 25 will get. Plus, new project has given me how much? 50 lakh. 50 lakh divided by how much? 10 lakh. And how much you will give? 5. And totally how much you will give? 30. So what is this 30? This 30 rupees will be paid from the second year onwards. So second year they will pay me how much? 30. And it will continue forever. It will continue forever. Means 30 divided by 0.2. How 0.2? K already we calculated. 30 divided by 0.2, 150. So these we need to compute. We will get the value of a share. That's what will become the value of the share for these Rahim Enterprises. Do you understand the working clearly? Yeah, everyone, please tell me one answer. Okay, let us begin. Yeah, right now. Calculation of okay. Per share already given rupees 25. Dividend for first year. Since it is constant every year. New investment equal to 1 crore 75 lakhs. Number of shares equal to 10 lakhs. Okay. Next. Step 3. Step 3. New EPS after the project. New EPS after the project. New EPS after the project. This will come in year 2 and thereafter. This will come in year 2 and thereafter. Final step, step 4. Share price. Share price. Okay. First, year 1. Year 1. I will be getting 7.5. Okay. Write down PV at the rate 1 divided by 1 divided by 1.2. 0.833. Next. Second year onwards, it will start at 30 and it will continue till perpetuity. It will continue till what? Perpetuity. At the end of which year? Second year. So from second year onwards, first year ki I will get only 7.5. From second year onwards, you will get the 30 forever. So for calculating P2, D by KE. There is no growth. What is the dividend? 30. Divided by what is the KE? 20%. 30 divided by 20%, 150. 150. 1 divided by 1.2, 0.649. Okay. So from the end of first year, 0.833, 7.5 into 0.833, 150 into 1. This is from second onwards. So we will take the same PV factor, 0.833. So you can compute. First year ending we got 7.5. From second beginning onwards, second beginning PV factor will not be there. Second beginning PV factor will become the first ending PV factor, 0.833. 7.5 into 0.833. 6.25. 150 into 0.833, 124.95. So both together 131.20. 131.20. So doubts I will clarify later. First you copy down up to here. Answer is completed. We got an answer as 131.20. If anyone in the class did not understand this one, I'm going to show the alternative also, such that you will get more clarity. I will show you alternative also for doing this part. I can understand some people might get a doubt as to how that computation has come. Okay. So I will tell you how it will be calculated one more time. Just copy down up to here. I will also give you alternative method. Maybe after writing that alternative, you will get full clarity. No doubts will come. Why I have done like this? ICA has done like this. ICA has done like this. But there is a best alternative for this. That best alternative I will show you. Answer will be same. But that alternative gives you more clarity. This is the ICA way of doing the answer. And directly first year they will take. Second beginning onwards they will take. Second beginning PU factor will not be there. PU factor will be always for completed years. So second beginning onwards it will grow. It will be having this new project now. So therefore they have done like this. But I don't think that this is a correct method of doing the answer. I will show you alternative. That alternative will give you much more clear opinion on this question. Shall we start? Shall I explain the alternative? You can do this also as a question number 12 model, incremental earnings model also you can do. No worry. That you need to add to the existing share price. Like that also you can do. Okay. But why we are not doing in this question? Now, in this question, they clearly asked, analyze the effect of new project on dividend payments. How your dividend payments are going to get affected, he is asking clearly here. That's why we did not do in that model. See, someone asking doubts in the chat box. Now, sir, previous question we have done incremental cash flow method. Like that can't we do? You can't do. If you do, okay, but marks won't be given for a good reason. What is the emphasis of this question? You should tell dividend payments. First I will get 25. Okay, next year I will get only 7.5. Next year I will get 30. These are all the dividend payments effect. Next share price effect we are separately telling. Understood? Here they are not asking you whether to take up the project or not. Project taking up is confirmed. Okay, therefore we can't do in that way. Previous questions, what is the motive? Our motive is to know whether to accept the project or not. Therefore, we will do incremental cash flow analysis like that. Here, project whether to take up or not is not the question. Project will be taken. So, capital budgeting decision is not there here. Here, after taking the capital budgeting decisions, post effect we are going to see. Do you understand or not, everyone? I want a reply. No silence. I want a reply. Did you understand what I said now? Those who asked that question in the chat box for them. Okay. Yeah. Sir, what is the alternative answer? Alternative answer means how to do it in a different way. Okay, much more sane way of doing the answer. Okay, I will show you. Please see here, everyone. I am removing this. Year 1, you will get 7.5. Year 2, you will get 30 rupees. Okay, you will get 30 rupees. When year 2 onwards, 2 ending onwards, you will get 30 rupees. And second year, from second year onwards, it will run till perpetuity. And how to assume the question, how to make assumptions in your mind. There is an investor who wanted to invest in that Rahim Enterprises stock, which will give him 7.5 rupee cash flow in the first year. His holding period is only 2 years. And he want to invest today, take the dividend for first year, take the dividend for second year, sell the share in the market. That is his intention. So, therefore, Rahim Enterprises is analyzed by that person. What he is saying, Rahim Enterprises will pay him 7.5 in the first year. That is a shrinking of earnings because of a new project. But second year, he will be getting 30 rupees because of new project and old project earnings. Okay. Now, second year ending, I will sell the share. Second year ending, I will what? Sell the share. Okay. So I will sell the share at what price? P2. P2 depends on what? D3 divided by KE. D3 divided by KE. D3 will be how much? 25 or 30? 30. So 30 divided by 0.2 equal to 150. Okay. But now we will apply second year PV factor. This is the correct way of doing. 1 divided by 1.2. 0.694. 0.694. 30 into 0.694, 20.82, 20.82, 150 into 0.694, 104.10. Value of a share 104.1 plus 20.82 plus 6.25, exact 131.17. Again we got. That's game over. Is the right way of understanding this. I don't know why institute has done that way, but with due respect, first I have shown you institute answer, which no one will understand. Which no one will understand. But I don't know why they have done like that. When there is a proper methodology, they are only saying clearly that first year you will get 25 rupees, but we will not get 25 because of new project 7.5 clarity. Second onwards, you will get 25 plus the new project earnings till perpetuity, that will be 30, and then you have to sell. Is the right way of understanding it. I think now people got a clarity. Everyone answer, ICA answer versus logical answer, which you understand properly. So that's why. If you see ICA answer, previous point they will do. Okay. So this is a right method. Actually, like this, if you explain, people will understand. Okay, first year I am getting 7.5. Second year I will get 30. Then I will sell the share. Like that. That assumption should run in your mind. Okay. Next, one person is asking to explain me the growth point. Here, whenever in the question they give growth in earnings, that should be taken as a G in the formula. D1 by KE minus G, G irukna. And the G, what is the G? The G is not growth in business, that is growth in earnings. Here they clearly said earnings are constant, there is no growth. And how to understand this 25% growth? Business growth means sales growth is there. Sales is a variable portion, means sales will not be constant every year, it will change. So whenever sales changes, accordingly what also will change? At the same rate, variable cost also will change. So the overall net growth will not be there. Okay, for example, see, 0 year first year, sales variable cost, sales 100 rupee, variable cost 60. Variable cost how much? 60. Okay, how much is my margin? Sorry, I will write it profit. Instead of writing contribution, there are no other costs. Let us assume profit 40. What is my percentage? 40%. Sales grown by 25% as given in the question. Business grown by 25. It will become 125. Then what happens to variable cost? Variable cost also will increase by 25%. It becomes 75. So 125 minus 75, 50. Sir, increase or growth is there. Compute. 50 on 125. Again 40%. So though there is a growth in the business, there is no literal growth in my earnings. Correct? That's what they wanted to convey in the question. Now you tell me, understood? Growth point. Some are asking me to explain growth point for them. My question is, now did you understand at least? So that is the interpretation of this particular point called as company has registered 25% growth. Okay. So with this, homework question is also complete. I said now homework question does not mean I am trying to escape by giving you homework and going away. Homework question means I will not give the format. You will try. Next day I will discuss first the homework question and then we will go into the next one. Now it is your time to tell, can I go into the next concept? Can we go to the H model or not? Everyone. Okay. So some are asking to share the answer. Please see here once. Copy down. 1 minute time I will give you. If you want to copy down fast. Can I continue? I need a reply. I need a reply. Can I continue? Still writing. Please write down fast. Some are still writing. Please, please, please. Copy down fast here. Please. Show some emergency in writing. So I will continue now. Please. Yeah, I can't wait here. Sorry. I'm very, very sorry. I'll continue. Okay. Listen. Yesterday I gave you overview of this model. Today we are going to write the theme of H model and a total logic we are going to write in the class today. So before going into that, let me explain roughly the discussion on H model. What is it? Okay. See, name of the concept is H model. What is the theme of H model? Let us try to understand in a rough language. I will explain. After that, fair notes also we will have it. Okay. Study material 2-3 lines were given, but I really felt that that is not properly explained. So they tried to explain the overall idea behind H model, but the real meaning let us try to understand through a proper analysis. Yeah. See here. First point is there are three types of dividend models. Number one, number two, number three. Number one, constant growth model. What is the first one? Constant growth model. Second one will be two-stage growth model. Next one, three-stage growth model with linear dividends. With linear dividends. This concept we will do using H model. Constant growth model enna? See here. Please see here. Share price will grow like this till infinity. till what? Infinity. It will grow like this till infinity. For this, the formula will be P naught equal to D1 by Ke minus G. Here the price will continue every year like that. P1 D2 by Ke minus G, P3 D3 by Ke minus G. Like that it will go on till perpetuity. It will run till perpetuity. So like this it will be constant growth. Okay, constant growth. Okay. Now next discussion. Two-stage dividend growth model. Here what happens now? See, company will experience a growth rate. Year on year basis la growth they will expect. Year on year the growth they will expect. And what will happen once the growth is expected? This growth will be anticipated. Expectation will be made for 3 years, so 4 or 5 or how many years I can gauge the market with the proper estimations, with the proper scientific analysis. I will make the research on the stock till that particular time. After a particular time, it will become very difficult to gauge the market, how it runs. It will be very difficult for anyone. Even equity research firms will not entertain analysis for beyond 3 years, because worldwide 3 years is taken as an economic cycle. Worldwide 3 years is taken as an economic cycle. Economic cycle and technology, thinking process. Okay, there will be a complete shift in the way of doing things for every 3 years. This is general economic cycle identified by the Stanford University in USA. When they started doing analysis on business models throughout the world, they started understanding what is the cycle of a business. Worldwide, on an average, what is the business cycle? Stanford University, when they does the research, they came to a conclusion, Stanford, USA, they came to a conclusion that there is a 3 to 3.5 years of business cycle. And what does it mean? Every 3 years, trend will change, patterns will change, technology will change, thought processes will change, and entire industry will change every 3 years. That's why you always observe 3 years ki shift will come in the market. How many years? 3 years. Shift will happen in the market. Okay. So you can understand when the foldable phones started 3.5 years back, it was okay. But Samsung has now created revolution where Apple is forced to now come into the foldable phones. What is this? Business model. It will force you, a 3 years cycle, it will force you to adapt to things. Understood the point? So that is called as a business cycle. Every business, see, don't tell some examples and tell, sir, see, sir, their change happened in 5 years. How can you tell 3? That's why I said average. On an average, business cycle throughout the world is a 3 years business cycle. And what do you mean by that? See, if I say something happening to the company, I am only telling about this year, next year, the next year, and the next year. I am not going to predict the future for 10 years, 20 years after, 30 years after. Those projections will go wrong because we don't know what will happen after 3 years. Maximum analysis we can do for 3 years. Generally, in questions, they will give data in such a way, 5 years, 6 years also they will give. At that time, we should not argue with the examiner. Okay, normal business cycle as per the university analysis is 3 years. How can you give question on 6 years? If they give, let us shut our mouth and do the answer. But I am trying to explain what is the concept of an economic cycle. Economic cycle is a business cycle where the patterns, trend, thought processes, technology, everything will change. Okay, so next 3 years I can project 20% growth will be there. Okay, so 3 years key. From 4th onwards, it will fall to a growth of 10% and continue till perpetuity. How much growth? 10 will be there. Constant growth rate will go on. This is two-stage dividend model diagram. Okay. Now, our main model, which is H model. This also say the same thing. What it said? Business will grow. I can gauge the market for 1 year, for 2 years, for 3 years, for 4 years. In this time, I will experience a supernormal growth. How much? 20. Later what will happen? Later it will fall. It will fall to how much? 10%, and this will continue till perpetuity. Okay, but when it fall, 20% won't fall to 10% all of a sudden. 20% won't fall to 10% all of a sudden. Suddenly it won't fall to 10. It will fall in a linear fashion. It will fall in what fashion? Linear fashion. Therefore, over a period of 1, 2, 3, 4, 5, 6, 7, 8, over a period of 8 years, this 20 will become 10. This 20 will become 10. So this 20 will become 19, 17, 15, 14, 13, 12, 11. Then it became 10. So in the linear fashion, it has a fall. Here there is an abrupt fall. Here there is a linear fall. It will be very difficult to identify dividends in all these years and make analysis. Therefore, we are going to use a model called as a H model for predicting the price of the share. Did you understand the overall idea of a H model or not? This is called a linear dividend model. Which model? Linear dividend model. Okay. First of all, everyone give a reply. Did you understand the logic of H model clearly? Yeah, first. Everyone clear? Huh? Okay. Now listen. Okay. So now we have completed this. Na? So H model uses a formula. Let us now understand what is the formula used by H model, and let us also understand the derivation of that formula and what is the theme behind it. Okay. Please see the screen, everyone. Please concentrate properly. New model, and last attempt as per the examiner comments, students performed very bad on H model. Therefore, there is every chance that they can re-ask the question with a different data. So I'm making it full screen. Please see properly. H model, the formula is P naught equal to D0 into 1 plus GL whole divided by KE minus GL. This is part 1. Part 2, D0 into H into GS by GL divided by 2 whole divided by KE minus GL. Okay, this is the formula for H model. Don't write. I will give time. At that time we can write. Okay, so H model ke this is the formula. P naught equal to D0 into 1 plus GL whole divided by KE minus GL plus D0 into H into GS minus GL divided by 2 whole divided by KE minus GL. Okay, so this will be the formula for the H model. Now doubts will be there as to how this formula has been derived. Okay, listen. Two-stage dividend model, what is our thought process? Company will grow at this rate, suddenly it will fall and run till perpetuity. This is the diagram, correct? Company will grow, it will fall suddenly and it runs till perpetuity like this, correct? So this is our thought process in which model? Two stage. This part is called as perpetual period. Which period? Perpetual period, also called as low growth period. Low growth period. also called as a long-term sustainable growth period. Long-term sustainable, and this will be sustained till long term, till perpetuity. Okay, wow. We will first value this and then we will value this. First preference, second preference. Sir, show me the proof, sir. I will show the proof. Wait. This proof. Or I will show you this way. What is the proof now? See. See here. There is a growth here. Okay. Finally, we got a big amount here. And what do you mean by that? 1 to 4 years, 4% we have taken. 1 to 4 years, 4% we have taken. This is called as a growth period, which is called a high growth period. Stable period, the growth is not 4, the growth is only 3%. So 3% we have taken. And first what we are analyzing, high growth period is analyzed first. Using that stable growth, we will calculate the value of a share, because we will hold it for 4 years and sell at the end of 4th year when the dividend is stable. Okay, so this is how we have done. And in the two-stage dividend model, preference will be given first to what? Preference will be given to the high growth period first. Next, we will give preference to low growth period, also called as a stable growth period, also called as a perpetual growth period, also called as a long-term sustainable growth period. But H model, we don't do that way. What they say, na? See, they will tell H model, the theme of H model runs on price of a share is because of two items. Number one, price of a company share will come because of two things. Long-term sustainability is reason number one, and super normal growth is reason number two. Okay, is reason number two. What is long-term sustainable growth rate? Whether I have a great growth in the company or not, whether company takes any good project or not, whatever the case may be, company will experience a basic growth. That growth will be there from today till the end of company. From today till the end of company, that will be there. That we call as long-term perpetual. So from today till infinity, if some growth rate is there, that's called as a long-term sustainable growth rate. Okay. What is supernormal growth? For 1 to 5 years or 6 years or 7 years, there will be a heavy growth that company will experience. Okay. This is for a limited period. This is for what period? Limited period growth this is. Okay. This is called as supernormal growth. But a very important thing you need to understand is supernormal growth means long-term sustainable growth plus something extra. Means if this is 7%, if this is 15%, 7% anyway long-term sustainable growth will be there, plus extra another 8% it is giving. So what is the supernormal growth? Supernormal growth is 8, not totally 15, because in that 15, 7% will come even though that supernormal growth is not there. Do you understand this meaning clearly? Yeah? Reply everyone in the class. I need a reply, not silence. Okay. Yeah. So long-term sustainable growth rate is T0 to T infinity. Supernormal growth period will be for some number of years. Okay. So what this formula tries to say is price is made up of two elements. Number one, this is perpetually having growth. D0 into 1 plus G we will write na for D1. Instead, they will write 1 plus GL whole divided by KE minus GL. KE minus GL. This is one part. Second part. Same dividend will grow for some number of years where there is a high growth period at a supernormal growth. Supernormal growth. This is GL. This is GS. Okay. Supernormal growth, I will call it as what? GS. Supernormal growth contains what? GL plus something extra. Correct? So if you take here entire GS, you are taking this 7% and extra again. So GL is computed double time. Therefore, what they have done? This is wrong. They said GS minus GL whole divided by 2. Okay, whole divided by 2. The remaining is same. KE minus growth, which will continue till perpetuity, should be the growth. KE minus GL. KE minus GL. This is how the formula has been made. So now the doubt will come. Sir, first part of the formula, clarity. So what is the price of the company stock on the basis of long-term sustainability? We know. Clarity. Second part, yes, D0, today's dividend, high growth period, how many number of years? High growth period, how many number of years? GS you should not take directly. GS contains GL plus something extra. I want that something extra part to be discounted. So what we have done, GS minus GL. Sir, no doubt. Sir, GS minus GL, okay, sir, perfect, clarity is there. But why we are doing divided by 2? That is our discussion now. Okay, well, see, listen carefully. What they said in this model, they said, company will grow like this. After that, it will fall and continue till perpetuity. Correct? This is how they said that it will be. Okay. Now, what they said, here there will be a supernormal growth of 20%. Okay, 20%. In this, 10% I will get even without that supernormal growth. And technically, how much a supernormal amount is 10% balance. Okay, it will fall to 10% and it will run till perpetuity. Correct? It will fall from 10%, from 20% to 10% in a single year. No, it will fall over a period of 5 years or 10 years. So it will fall. Correct? So listen carefully now. Listen, please listen. Here problem enna? 1, 2, 3, 4, 5 years supernormal growth 20. Okay, supernormal growth 20. From 6th year onwards, it will linearly fall. Okay, from 6th year it will linearly fall till 16th year. At 10 years it will linearly fall and it will reach 10%. That will continue till perpetuity. Till now, what is our assumption? Two-stage model, 5 years growth. That's all. Fall to 10, continue till perpetuity. Next year onwards. Like that, it really won't happen. Na? It grows slowly. Fall also will be very slow. So linear fashion companies are growing. Linear fashion companies will fall. So it went up by 20, reached a tip point, saturation point it reached. Now the fall will be linear. It comes to 19, 18, 17, 16, 15, 14, 13, 12, 11, 10. 10 will continue till perpetuity. Clear? Now taking dividend for each year might be difficult sometimes. So therefore what they have done, they said, see, 6th year, 19% is our growth. 7th year, 18. 8th year, 17. But every year counting will become difficult. What they said, high growth saturation point is 5th year. Low growth tip point is, okay, 15th year. 5th year is the highest tip they reached. Lowest tip they reach at 15th year and it will continue till perpetuity. And from 15 to 5 to 15, that 10 years period is there now. 5 to 15, that 10 years period. In that 10 years period, what will happen? In the 10 years period, my growth will be 20, 19, 18, 17, 16, 15, like that it will go. Okay? And if I close my eyes, put my finger like this, some year will get selected. Okay, what year? 17th year selected. What is the dividend at that? What is the growth at that time? 13%. I will close my eyes and again I will put like this. Okay, I touched 18%. So one time 18% is there. 13 is right, 18 is right. Both are right. Telling 13 for all the years is wrong. Telling 18 for all the years is wrong. Are you understanding? Telling 13 for all the years is wrong. Telling 18 for all the years is also wrong. 18 is for 1 year. 13 is for 1 year. So I don't want like that. I want one amount to be written there. Therefore, what they said, highest tip you reach will be 20. Lowest tip you fall will be 10. Correct? Yes or no? If I tell 12, 12 is wrong because the 12 is possible only in 18th year. 18th or 13th, whatever the case may be. 13th year 12 is right. If I tell 17, 17 is wrong. 17 is possible only in 8th year. 17 is possible only in 8th year. So I should not tell any one number because that number is only for an year. So I don't want any one number to be said. I want an average number. That's why what they have said, your growth, supernormal growth is at 20. Lowest growth period you will reach is 10. Correct? So 20 minus 10, 10. 10 divided by 2 will be how much? 5% is the extra supernormal growth that you have given. For that, we will value the share and we will get the full value of a share. With a problem with the numbers, we can understand it much better. Up to here, everyone, please tell me, did you understand the concept of H model clearly? Yeah. Okay. Yeah. So first, I want to reply everyone. Perfect, everyone. Understood the concept clearly? Okay. Now let us move on to the next discussion. Okay. Linear growth model or H model. Question number 14. Question number 14. Okay. So you are valuing Siemens AG Frankfurt, SIE is the code. With H model approach, the relevant inputs to your valuation are as follows. Current dividend D0 euros 1. Dividend growth rate is 29.28%, declining linearly over a 16-year period to a final and perpetual growth rate of 7.26%. The risk-free rate is 5.34, market risk premium is 5.32, beta is 1.37. Using a linear declining growth model of Fuller and Shear to value the stock. Level 2 CFA 2023 exam question. Okay. Read the question before we start with the solution. Please read the question first. Read the question. As I said, no one is giving Olympic medal to you. Spend time in learning properly. Okay. Let us do. First, to value any share, we require KE. KE not given, but data is given which is required to calculate KE. Okay, na? Write down KE. RF plus beta into beta into market risk premium. Market risk premium means they have already given RM minus RF. Sorry, working here. This is only for formula. Okay. I've given enough spaces for you for easy understanding. 1.37 into 5.32. is 5.34. Right now, 12.63%. 12.63%. Okay. H model formula. Formula you write down. P naught equal to. Think about the theme of H model. That's it. Don't mug up. You know the derivation now. D0 into 1 plus GL whole divided by KE minus GL plus D0 into H into GS minus GL whole divided by 2 whole divided by KE minus GL. Working. What is the D0 given? 1. Okay. Into what is the low growth period? Sustainable growth period? 7.26. Ante 1.0726 divided by KE 0.1263 minus 0.0726. First part of the answer. Plus. Think and answer. When you are writing itself, understand the theme of H model and write. Today dividend is 1. This 1 will grow at a high growth period. At a high growth period. Then it will decline linearly at what rate? 16% rate. How much rate here? 16% rate. Currently the dividend growth is 29.8. Okay, that 29.28 will not continue forever. It will slowly decline over 16-year period. So that high growth will not come to low growth once. It will come down to lower growth over a period of 16 years. So 16 years you will experience a supernormal growth. Okay, I'm repeating one more time for those who are not understanding, those who are not listening, those who are not putting their mind here when I'm explaining. I'm explaining again one more time. Now growth is 29.28 here. 29.28. Okay, that will start declining now. That declines to how much? 7.26. In 1 year, over 16 years, over a 16 years period, it will fall. Okay, and for 16 years, what you will have? I will have more than 7.26. They reply, yeah, everyone. Solunga, everyone. Thunga, yeah, everyone answer, yeah. 7.26. 7.26 is the lowest growth that you will experience. Okay, over 16 years, you will get more than 7.26. Okay, means you reach, now you are at 29.28, correct? Now you will fall directly to 7.26 1 year. No, 29.28 will fall to 7.26 over a period of 16 years. Okay, over a period of 16 years it will take for you to fall from 29.28 to 7.26. 7.26 is the lowest rate. 29.28 is the highest rate. Okay, the highest is the lowest. Now what I can tell, during this 16 years period, you will be having a supernormal growth, okay, beyond the lower growth rate, but at a declining rate. Means what? Let us say this year I am getting 28. What do you mean by 28? Lowest is 7.26. I am getting 28. 28 minus 7.26. There is a supernormal growth of 20.74. 20.74. But previous year, like 29.28 minus 7.26. 22% is my supernormal. So supernormal growth rate is falling day by day, year after year. Okay, until these all 16 years, I will experience a supernormal growth, correct? But not at a standard rate, at a declining rate. So you can't take highest, you can't take lowest. You should take an average of both into, okay, GS. I will make it full screen, write down, because some people will be watching on mobile phone now, that's why. problem will come. So whenever working is there, I will make it full screen. Explanation, I will make it normal. Okay. So high growth period, supernormal growth is, what is the 29.28? So 0.2928 minus low growth. How much it is? 7.2, 0.0726. Okay. 0.0726. This divided by 2. This divided by 2. Average we have taken. Okay. Next. Whole divided by 1263 minus 726. Do this first. 0.1263 minus 0.0726. Denominator first have a clarity. 0.0537. 0.0537 plus 0.2928 minus 0.0726 divided by 2 into 16 into 16. 1.7616. 1.0726 divided by 0.0537. 19.97 plus 1.7616 divided by 0.0537. 32.80. Totally 52.77 euro. 52.77 is the price as per H model. Copy down. Copy down the answer. Okay, bye everyone. Give one yes. Have you completed? Revant Krishna has asked one valid question. What he is asking is, sir, we have considered only from 29.28 when they reach the high growth period and falling. Don't we consider from the beginning till 29.28? Hey, what Revant Krishna is asking is, see, company will grow like this and it will fall and continue. Sir, you consider 29.28, 7.26, this fall we considered and this we considered. This is the first part of the formula, this is the second part of the formula. Where you consider this data they did not give in the question. Okay, this data they did not give. If they give this data, that also we have to consider. That will be done separately. Sir, how that question will look like? Do you understand the question of what he has asked? Revant Krishna, this is the question you are asking, right? Am I correct? Revant Krishna, who is asking this question, this is what your mind on the question, correct? Yes, sir. So what he is asking is, it's a valid question. Sir, you started with the discussion that 29.28 is the supernormal growth. It's highest peak. Fall you have seen, decline. Fall you have seen. So for this fall, GS minus GL like that we have done. Then we have taken first part of the formula already. What about this part? Okay, that is the question. They did not give that in the question now. Sorry, sir. They did not give in this question. Very good. Last attempt exam they gave. They did not give. This type of question exam also came. Okay. If they ask a question on the beginning stage also, then how it look like? Then it look like this question. I know that you will get this doubt. Okay. I know this doubt, someone will ask this doubt. That's why I'm ready with that question also. 2018 CFA level 2 that question came. Okay. How that look like, all these things we will see later. First of all, let us write down the theme of H model. Okay. Write down the notes. So if like that a question comes, how to write also, I will make you ready. So easy only, not that difficult. Write down. In a constant growth model, till perpetuity. Till perpetuity. Time and price relation will look like this. Time and price relation will look like this. Write down this line. I'm not going to give extra time for you to write the notes, sir. This is the time I'm going to give you. Okay. Have you all completed writing point 1? Have you completed writing point 1? Okay. Next. Point 2. In a two-stage dividend valuation model, in a two-stage dividend valuation model, in a two-stage dividend valuation model, we will consider high growth for some years and later a sudden fall to lower or stable or okay, lower or stable or long term sustainable growth till perpetuity. Pictorial presentation, how it look like? time and price relation. Okay, time and price relation. Okay, it will grow like this. Okay, then what will happen? It will fall to a rate and it will continue till perpetuity. So this period will be high growth period. This period will be low growth period. This no period, since it's a sudden fall. Okay, everyone please tell me, did you understand this explanation clearly? Yeah, everyone reply. Did you understand this explanation clearly? Yeah. Okay, so this will grow at a constant rate. When I say constant, slope is constant. When slope is constant, straight lines are formed. So that's the meaning here. Okay, well, growth is constant. Dividend amounts will change. See, dividend my prices, dividend amounts will change. See, this year 2 rupees, next year 2.1. Amounts will change. But dividend growth rate will not change. Na? We are writing the chart for the growth. Price growth. Okay. Next. However, in reality, company reaches high growth period and at a saturation point, however, in reality, company reaches high growth period for some years. Okay, company reaches high growth period for some years, and at a saturation point, it starts falling to low or stable or long-term sustainable growth rate. But the fall is not sudden. It is linear. To compute the linear impact, H model is introduced. Time and price, any price, growth or dividend, whatever the case may be. Okay, what they say is high growth, low growth, same concept, high growth, low growth. This period we call as high growth period. This period we call as low growth period. But what is this period? Linear decline period. This is considered only in H model. This is considered only in H model. So high growth period, high growth to low growth ki linear decline period, finally reached low growth and it will continue. Price is made up of two components. Price based on long-term sustainability. Price based on supernormal growth. Supernormal growth and supernormal growth means low growth plus premium growth. Low growth plus premium growth. All together we call supernormal growth. Okay. So low growth or long-term sustainable growth, if you observe, for that K minus GL. This is the price based on long-term sustainability. Next, price based on supernormal growth. D0 into H. D0 into H into GS minus GL whole divided by 2 whole divided by KE minus GL whole divided by KE minus GL. D0 dividend paid GL long term sustainable growth KE cost of equity H. high to low linear decline period. And during all these years, you will be having some premium growth is there. GS, supernormal growth. Average growth. The premium. It's not completely S, it's not completely L. It is premium between GS minus GL. Everyone, please tell me, did you understand the theme of H model? Notes everything clearly, yeah? Everyone, give a reply. Give a reply, everyone. Okay. So now we have done the concept relating to the formula derivation interpretation of H model completed. Okay. Next discussion. Leave question 15. Question 15 we will do once after question number 16. Let us solve question number 16. May 2026 attempt 5 marks question from H model. Okay. Let us read. XYZ Limited recently paid a dividend of 40. D0 given. Company is entering into a 5-year transition phase where its current 15% growth will decline linearly to a stable perpetual rate. And he has also given only the fall period. Okay. Financial parameters, transition 5 years, declining linearly from year 1. Okay, understood. Next, current data. ROE. Why they have given ROE? Return on equity into retention ratio will become G equal to B into R. B means retention proportion, R means return on equity, both has to be multiplied. Terminal growth, terminal data, ROE 12, retention 50%. Again, market data, required return is 13%, market price 850. Calculate the intrinsic value using H model. Can we start doing it together, everyone? One yes. Can we do it together, everyone? Okay. Yeah. So let us do it together. Please don't give any rush of blood answers. Slowly let us do that answer and try to get through that particular thing. First, write down step 1. Write in a stepwise format such that you don't commit any mistakes. Step 1. Calculation of supernormal growth rate. Supernormal growth rate. Calculation of supernormal growth rate. Okay, va? See here, current what is the ROE? 20. What is the retention proportion? 25.25. Terminal data ROE 12. Retention 50%. Retention 50%. Like that they have given. Correct? Okay. So first one, write down. G equal to B into R. B means retention proportion. How much? 0.25. Into what is the R? 0.2. 0.25 into 0.2. 0.05. Okay. Zero point zero 0.05 ROE retention proportion, or that will be equal to 5%. Sir, what way this will be relevant for our answer? The question. He has clearly given here current the growth rate is 15%. Current growth rate is how much? 15%. Sir, there 15% is given. Okay, here they have given this. Sir, can I know what is the meaning of this particular statement? Okay, how this is relevant? You will have to clarity, na? That doubt will come definitely when we are doing the question in exam. Yes or no? See, I repeat one more time. I am asking not to do. Don't do. That's why I have to explain. Some people might be copying now. Now, if I strike off, you will also strike off along with me. Yeah? I wanted to explain one point. See, current ROE is 20. Okay. Retention is 25. Normally, what is the G? B into R. Retention proportion into return on equity. Return on equity means 0.25 into 0.2. How much it should be? 5%. What is this 5%? 5% will be the growth rate normally when we compute. Correct? But what they have said clearly, 15% growth they have given here. Company is entering into a 5-year transition phase where its current 15% growth will decline linearly to a stable perpetual rate. Stable perpetual rate. So this particular data given in the question is irrelevant. This is only to take a track out of us. Just it's like a trap question that you have to understand. So the current data is not relevant for our question. We require either a high growth period answer or we require either linear decline portion. We don't require amidst of both of them. Okay, that is not required. Current data is not relevant. We want the current growth rate from where we will start and where we will fall. Previous question la 29.28 and 7.26. Okay, 29.28 and 7.26. These two numbers are relevant. In this question, 15 and we will calculate now. That is relevant. Current data, what they are doing is not relevant for this question. Is the first observation that everyone has to make before we start with this particular question here. Okay, well, let us begin now. Now let us do. Start. Calculation of supernormal growth rate. Though current data is given, we require for H model computation two parameters, namely, number one, high growth to stable growth. Next, stable growth or sustainable growth, anything you can. High growth to stable growth, 15%. Stable growth, we have to calculate. The terminal period. Stable growth means what? 6th year onwards. Okay, 6th year onwards. So this is the first thing. So what is the supernormal growth already given? Supernormal growth is 15%. So GS will be taken at 15%. That 5% thing is irrelevant in this question. The first observation that we need to make in exam question. Okay, well, next, the remaining part is same. Step 2, calculation of long-term sustainable growth rate. Hey, LTSG means not long-term short growth or short-term growth like that. Long-term sustainable growth rate. Okay. Now you can write G equal to B into R. For this, the data is irrelevant. Okay. What is the retention proportion in the terminal period? 0.5. What is the return on equity at that time? 12. So what will be the G? 6. This will be called as GL equal to 6% or 0.06. Okay. Next. Step 3. Step 3. Calculation of price as per H model. Calculation of price as per H model. P naught equal to, first write down the formula for your practice. D0 into 1 plus GL whole divided by KE minus GL plus D0 into H into GS minus GL whole divided by 2 whole divided by KE minus GL, that equal to, in the question they have given D0 already. How much is the D0? 40. 40 into low growth period. What is the growth here? 6% at 1.06 divided by KE. I think they have given in the question 13%. D0 40 into high growth period. How many years? 5 years into 15% will fall to 6% over a period of 5 years. Okay. Over a period of 5 years. Here instead write down as percentage na 0.15 minus 0.06 whole divided by 13% minus 6%. So 40 into 1.06 divided by 7%, rupees 605.71 is the part 1 answer. Okay. 0.15 minus 0.06 divided by 2 into 5 into 40 whole divided by 7%. This is rupees 128.57. So total answer 605.71 plus 128.57, 734.28 is our answer. 734.28 is our answer. Sorry, step 4. Decision. What is the question they asked? Estimate intrinsic value 734. Current market price is 850. Assess whether the stock is undervalued or overvalued. Okay. So intrinsic value, also called as fair value, 734.28. Actual value 850. Overvalued by how much? 115.72. 115.72. Okay. So percentage overvaluation is 115.72 divided by 734.28 into 100. Okay. 15.76%. Okay. 15.76%. This is given for 5 marks in the latest exam. If you do it properly, apply the formula, good. The only twist point here is irrelevance of the current growth. Current growth we don't want. Okay, current growth we don't want. Now the growth is how much? 15. That will fall slowly. 1 year growth can be 5, 1 year growth can be 11. Okay, but it will slowly fall down and it will reach 6%. But that fall is not 1 year, that fall is linear over a period. Everyone, please answer. Are you all comfortable with this particular thing? Did you all understand the exam question? May 26, yeah, you said not difficult, difficult, difficult. If you know this, it is easy. But if the model is not known, definitely it will be difficult. If we don't know what is the formula. So after every chapter is completed, last attempt what question was given in May 26 paper, we will take it and we will do. Then the confidence will get boosted. Okay. Next discussion. Take question number 15. Take question number what? 15. Okay. Let us read this. Elaine Bouvier is evaluating HRL. She wishes to value HRL using three-stage dividend growth model with a linearly declining growth rate in stage 2. After considerable study, Bouvier has decided to use the following information in her valuation. Current dividend 0.39. Bouvier estimates required return is 8.72 KE. Stage 1. Dividend will grow at 11.3% annually for next 5 years. Stage 2, which will lose for 10 years, the dividend growth rate will decline linearly starting from stage 1, ending at stage 3. Stage 3, equilibrium long-term growth rate of 5.7%. Calculate the value of equity share using H model. Okay, next attempt, if any question has to come in CNA, 1000% I will give guarantee like this only they will ask. 1000% guarantee because there is no other model to ask on this. Read the question. Take 2 minutes time. Okay. If you want, you take a rough paper and try first. Okay. 2 to 3 minutes time I will give to everyone. Try. Take 3 minutes. Take 3 minutes time. No problem. But please try everyone. Okay, everyone. I gave you 3 minutes time. Have you at least tried, everyone? Okay. Now, one person asked one question previously. Who is that person name? Yeah, I forgot. One person asked one question. I referred to his name also. He asked this question. Sir, you have directly taken 29.28. What about the period before that? Someone asked the question. I didn't remember exactly who he is. Revant Krishna. Revant Krishna. For you only this question. Okay. This question is on that only. See, until till now in H model, what we discussed, H model, what is our understanding? It will grow, it will fall, it will go. Correct? This is our understanding. We are given 29.28, fall 7.26, or we are given 15%, fall 6%. So something like that they are giving. What about this period? That period we don't want because that has already grown past. Always FM is concentrating on what? The future. So this relates to past data. Therefore, we don't take. But in this question, they are starting the data from this point. Okay, and the question starts not from here, question starts from here. Therefore, what will happen? We need to consider first 4-5 years growth reaches one level, again it will fall. Like this, we need to do this question. Did you all understand the theme of this question clearly? Yeah, everyone. Have you understood the theme of this question? Okay, let us start. Let's do it together. Let's do it what together? See, Ellen Bower is evaluating HRL. She wishes to value HRL stock with three-stage model. Linearly, it will grow for till stage 2, stage 3 it will fall. Current dividend 0.39 euros. Bowyer estimates that required rate of return is 8.72. Dividend will grow at 11.3% annually for the next 5 years. Annually for the next 5 years. What will grow? Dividend. Dividend will grow at what rate? 11.3%. Annually for how many years? 5 years. Okay. Let's do it. D1. Working also you do. D1. I have given all the tables. You need to just fill them. D1 to D5. D1. How much it will be? $0.39 $0.39 into 1.113. 11.3% na? Okay, 11.3% means 1.113. So you should compound it. So 0.39 into 1.113, 0.43. 0.43. Write down it. Write it down, everyone. $0.43. $0.43. Next, D2. $0.43 into 1.113. $0.43. Up to there, everyone has got a $0.43. You can either write it as $0.43 or 0.39 into 1.113 into 1.113. That also will give the same answer. Okay. So 0.39, or you do this way, that will be much better. Na? Clarity will be there. 0.39 into 1.113 square. That's better. Approximation error also will not come. 0.39 into 1.113 into 1.113. 0.39 into 1.113 into 1.113. 0.48 I got. Okay. Next. $0.39. 1.113 whole cube. 0.39 if you multiply. 0.5354 you can write. $0.54. Next. $0.6. $0.6. .66 or 0.67 you can write. First of all, everyone tell me, did you understand the computation up to here clearly? Yeah, everyone? Okay. First of all, everyone reply. Yeah, everyone up to here understood, everyone? Yeah, completed. So, notice dividends for first 5 years will grow at 11.3% per annum and then stabilize linearly. Okay, dividends for the first 5 years will grow at 11.3% per annum and will stabilize linearly at 5.70%. 5.70%. Okay. Now, up to here, please answer everyone. Understood the discussion clearly? Yeah. Everyone? Up to here, did you understand the discussion clearly? Yeah. Listen here. Listen. Some amount of clarity is required from now. Please listen. I will first explain you the discussion. See, till now, two problems we have done. Problem number 1, CFA model we have done. Problem 2, exam question we have done. Problem 3, new model we are doing now. The beauty of this question is, in the first question we have done, first CFA question, 29.28 to 7.26 euros. That question, 29.28 they have already given. That 29.28 is like 0.67 here. And they have given this data already in that question. That's why Revant Krishna asked one doubt. What he has asked, sir, you directly started with the 29.28. So what happened till then? Till then, this has happened. So, first 5 years it reached 0.67 and then it will start falling. And it will go by 11.3% like that, and then it will fall. And fall will be linear. It will not be a sudden fall. Correct? So, what he is asking, see, it anyway grown at 0.67. It anyway grown at what rate? Yeah, 0.67. So 0.67 will be the dividend at the end of 50th year. At the end of what? 50th year. Okay. What I will do here, the question how to understand. Listen carefully. There is an investor. That investor wanted to hold a stock for 5 years. At the end of fifth year, he wanted to sell that. At the end of fifth year, he wanted to sell. At what rate he has to sell? He has to sell at P5. Has to sell at what rate here? P5. Okay. Normally, what is the formula for P5? D6 divided by KE minus G. D6 divided by KE minus G. But now problem started. That D6 divided by KE minus G is right if there is a sudden fall to a rate and it continue. But I wanted a price at the end of fifth year. I wanted a price at the end of fifth year at stage 1. Stage 1 is for 5 years. Stage 1 is for 5 years. Stage 2 will be for 10 years. Stage 3 will be 11th to infinity. Repetition. 1, 2, 3, 4, 5. Growth. See my body language. Or I will write here. 1, 2, 3, 4, 5. Growth. Reached the peak. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I reach the fall. Then continue. Did you understand the explanation now? Everyone. Did you understand my explanation now? Bad response. Everyone participate here. A lot of complication concepts are there. Why you sit silent? Understood this? So I reached a peak of 11.3 here. I will reach a fall of, what is the percentage? 5.7. But this fall will be a linear fall. This fall will be what fall here? Linear fall. It will not happen suddenly. Okay. Now what is the question? 1, 2, 3, 4, 5. Correct? There is an investor. Investor who wanted to hold the stock for how many years? 5 years. Okay. 5 years means he will receive 0.43 in the first year, 0.48 in the second year, 0.54 in the third year, 0.6 in the fourth year, 0.67 in the fifth year. Fifth year he will get D1, D2, D3, D4, D5 and he will sell at P5 and he will sell at P5. P5 will be dependent on what? P5 will be dependent on D6 to D infinity. Correct? Now problem started. From D6 to D16 for 10 years, there is a linear fall. Means P5 equal to D6 divided by K minus J I cannot use. Now for P5 computation, I should use a H model. This is how this question is framed. Everyone answer, yeah? Understood the point clearly or not? Everyone understood clearly? Okay, let us write down formula. P5 equal to P0 equal to D0 into 1 plus G formula. So P5 equal to D5 into 1 plus GL whole divided by KE minus GL whole divided by KE minus GL. Part 1 of the formula plus D5 into H into GS minus GL whole divided by 2 whole divided by KE minus GL. Write down. What is the D5? What is the due date for the fifth year? 0.67 into what is the low growth period? 5.7 and 1.057 whole divided by KE given in the question. Somewhere they have given KE. 8.72. 8.72 minus 5.7%. First part. Value this separately. 8.72 minus 5.7. First let us have that. 3.02%. Okay, it is 23.45. And because of your long-term sustainable growth, $23.45 will come. Next, D5 will continue like that for 10 years, starting with 11.3, 0.113 minus fall to 0.057, correct? Whole divided by 2, whole divided by 8.72% minus 5.7%. Okay, 5.7% plus, okay, 0.67 into 10, sorry, what's the 0.113 minus 0.057 divided by 2 into 10 into 0.67, whole divided by 3.02%. Okay, whole divided by 3.02%, we got $6.21. Total dollar 23.45 plus 6.21, 29.66 dollar, 29.66 is what P5, the price at which I will sell. So what is the discussion here? I will get 5 years dividend. Already we computed dollar 4.3, dollar 4.8, sorry, 0.48, 0.54, 0.6, 0.6, 0.67, $29.66, $29.66, $29.66, 8.72, 0.920 already computed, 0.920, 0.846 like that. Just multiply them. 0.43 into 0.92, 0.40, 0.846 into 0.48, 0.41, 0.54 into 0.778, 0.42, 0.6 into 0.715, 0.43, 0.67 into 0.658, 0.44, 29.66 into 0.658, 19.52. Total 21.60. I got the answer. $21.60. Note. Diagram is our note. Okay. Okay. How much? 11.3. Yeah, 11.3. 5.7. 5.7. Pink period is there, na? This period. Holding. Sell at P5. Depending on D6 to D infinity. In this, D6 to D16 linear, D17 to infinity stable. With this, we completed all kinds of models in H model concept. Everyone, please answer. Did you understand the discussion clearly? Yeah? So successfully we have completed H model of all kinds of questions. I want a reply from all of you. Tell, are you all comfortable with this discussion clearly? Yeah? Have you all got the clarity? If growth changes every year, you need to change it. That's it. Means if it is not 11.3, 11.3, 11.7 like that, 5 years you will consider that growth. So everybody answer, we have completed entire H model now. We have completed question number 14, question number 15, question number 16, exam question, everything was completed. Are you all comfortable now? Okay. With this, we completed our today's session as well. Next class will be the game changer session because dangerous questions we are going to do. As I said, all small questions which I do from the beginning till the end in the regular classes, not small question. Regular class, what we will do from small question, we will start slowly, we will raise the level. But here directly we are jumping into the concepts. So with an intention that you already had a coaching. Okay, so therefore, question number 17 is on rights offer. Okay, this question not tested in exam. This is an RTP question. If this has to come, worst case scenario exam, so these questions will come, and this can be asked for 12 marks in exam. Very, very good question. Rights offer the best question that they can test you. Rights issue, three types of models are there. Number one, rights offer versus public offer debate. This question on that. Okay. Next, rights offer wealth point of view. This question. Okay, rights, how it affect the wealth of a shareholder. Okay, who is trading on rights offers? Question number 19. Then we will go to linear growth model. So linear growth model, just now we have seen na? Linear growth model according to H model you have seen. This is not in accordance with H model. Different model we are going to do. This is a linear growth model. These all questions came in exams. 7 marks, 8 marks questions these are. Question number 20. Question number 21. And question number 22. And question number what? 22. These all questions we are going to do. Once these all are completed, share evaluation will get completed. Extra problems, if you wanted to practice, you can take my question bank and you can practice there. Okay. But these questions we should never leave at any cost from share evaluation chapter. First of all, I want one reply from all of you. Did you find the refreshers batch, whatever we announced, to be useful for you? To the extent of whatever the syllabus we completed till now, do you really feel it worth that we have to listen to this refresher course, everyone? Diagram, wait. This is the diagram. So, with this we completed H model as well. So next session what we will do is we will go with the rights offer. Okay, we will do the rights offer. So next class we don't put what to say, great things to happen. Rights offer we are going to concentrate. Okay, bacha questions we are not going to do. Direct hit the biggest one in the existing syllabus. That is syllabus what is the worst case scenario question that has come till now in RTP 2016 or 2017 RTP question this is. Okay, this is a public issue versus rights offer. Okay, question A this much, and this question here it is like this. If it is coming in now your question paper, 14 size font, 2 indent they will maintain. This will run to 3 pages. This question. Okay, so therefore make your mind accordingly. Next class we are going to start with rights issue and impact on wealth. Okay, well, shall we close the session for today, everyone? Are you all clear? Notes was already given. Okay, yesterday itself I have shared the notes. Okay, yesterday itself I have shared the notes. So if you have any kind of query, you can message to me directly. If anyone did not respond, 9866728874. Material already I shared. Okay, if you have any particular query, please put a message to my number directly. Okay, group also we will add all the people, because live there are around, okay, in the live there are students now. So totally when the classes are taken, there are around now, yesterday another 60 classes, 70 classes we sold. So now we reached around 470, 480. But live people are not joining. I don't know why. And they will join once share valuation is complete. I don't know their intention. And they may think that they are scholars in that chapter, share valuation. Might be they are thinking like that, or share valuation anyway, I'm uploading on YouTube now, they are listening there. I don't know exactly what their intention was. Okay, sir, anyway.